All right, so yeah, it looks like we're live here. Let me just get a quick sound check here before we get started, and then we'll get into it. Yeah, let me know what you think. Nat gas. Yeah, 7 or 11. Kind of looking for that. Looking for that $7 level. I'd really like it to get there. But, it's a runaway train right now, so just wondering everybody's thoughts. Anyways, let me know if the sound's good, and then, yeah, we'll get right into it here. We got Nvidia, we got Snowflake, we can cover. Yeah, we'll cover pot stocks for sure. Write that down. Good. Okay. All right. So, um, yeah, so I just wanted to do the stream. I had a little bit of time here. Thanks, Joe. Had a little bit extra time tonight. Decided to do a stream, cover a few things I didn't quite get to in the daily video. Had a few things going on, so I was a little rushed in that. But yeah, overall, there's a couple of things that I want to point out. One I definitely forgot to point out. But yeah, outside of that, nice job on Roku to everybody who got in on that one. This one probably, I really wanted to hold this, but in this market, you got to be careful. Uh, and you got to take what you can get. So when I see over 10% gains in, basically 24 hours, yeah, I got to take that in this market. If it was a different market environment, I would let this go right to gap fill. It probably gets there tomorrow, assuming the market cooperates. But yeah, nice little gain there on that one. And, for an example, like we had Zoom here, we've held this for quite a while and averaged in nicely. And we got in the money and then we're out of the money and then we're back in the money. Every time it got back in the money, I was like, all right, this is it. We're going to pop up here. And then the next day it would just fall back down. And it ended up working out, ended up taking a gain on it. But, I don't want to get stuck in that trade. So take the gains while you can and be nimble in this market. Anyway, so Fed minutes, they said, basically all of them said that inflation was a concern. The Fed minutes was kind of a non-story. But the market was kind of hanging on it because the market just needed to get it out of the way. But they basically all said that inflation is their top concern. But for the first time, and I kind of touched on this earlier in the week, the first time I think some of the governors mentioned that they were basically paying attention to markets. And that's something we haven't heard them say in a while. They haven't really said anything Powell hasn't said anything about the markets every time he's been interviewed. He's really hasn't talked about it much. All he says is inflation, this, inflation, that. So, but earlier in the week, Bostic really kind of came out and said, if the economy is doing well later in the year, maybe September, the Fed may pause its tightening. So they're starting to plant the seeds, right? This is how they do it. You remember last year, Janet Yellen said over the summer, rising interest rates wouldn't necessarily be a bad thing for the market. And everybody kind of ignored that. And I said, I was on Jason's stream before I was doing this. I said, guys, she's telling you that they're going to raise interest rates. That's what these guys do. They make these statements, then they walk it back. They make these statements, they walk it back because they're basically getting the market ready for it. But that's really what happened with the Fed minutes. We could talk about Nvidia here. Got a lot of questions on this, obviously. So as far as Nvidia is concerned, what it's doing after hours, it's basically holding the opening price. I think it opened at, let's see, so about 160. So it's at 158 right now. And you still have, outside of the after hours action, you still have 3 higher lows here. So if it can hold this area, I think that's a net positive for the market. And I'll tell you why. You've got those higher lows, but it's not a meltdown. The market was basically scared that we were going to have a Facebook or a Netflix or a Snap, and that didn't happen. So yeah, it's down a little bit after hours, but it's not like it's, you know, dropped down to 120 or something like that. It's holding on to the recent local lows, in fact. And if you look at the NQ here, I had that up a minute ago. Obviously that's sold off, but it's actually recovering pretty nicely here. And it's almost, you know, if they can get back above this red bar high, nothing to say it can't go back up there and challenge those highs. This level here on the NQ is kind of the big, you know, the big area. So you got that gap there. But the one thing that you got to pay attention to, though, is we have higher lows now. And we didn't quite get there today, but, you know, if we can consolidate beneath that, eventually this will break. The bears did come in at, you know, really 330, 320, and they you know, they pushed this market down, and they had to, because this trend line, you know, they really had to defend that trend line. And actually, you can see a little bit better on the ES. So they pushed it down by 5 p.m. because we sold off a little bit after hours, but the cash close on the SPX was, you know, through that, and on the spiders it was through that. They cannot afford a high, you know, a close above this pivot high tomorrow. That's going to send us into squeeze mode, especially anything above 403.80, and especially a close above that 20 period moving average. So that's kind of the way I see it. The bears had to come in and defend the market here, but the fact that Nvidia didn't, you know, it didn't get crushed, I think that's a positive for the market. The market's got the Fed minutes out of the way. It's got Nvidia's earnings out of the way. So there's nothing really hanging over its head anymore. So that's kind of your positive here. You guys know I've been talking about, so obviously we talked about higher lows on the NQ. So that's a positive 1, 2, 3 there. The Russell 2000 not making new lows like everything else did. And it's into absolutely monster levels here. But sometimes it, oops, you know, sometimes they defend it right away. Sometimes it takes a week or two. But that's a nice tail candle there. You went straight into the level, oversold, 50% fib. You know, look at this trend line. I mean, there's such an attractive, like this is such a buy right here. It's just a matter of, you know, can the market get out of that level, and can it break above that trend line? And it's really up to the bulls. I think it will happen. It's really just a matter of time here. But until then, we're kind of, you know, we're in prove it mode. Semiconductors are making higher lows too, so that's a good sign. Now, here's the two bullish indicators that I kind of alluded to in the title here. I didn't point out in the first video. So let's look at the spiders here. And I don't talk about it often, but we're just going to throw on a Mac. And you can see for the first time since April, we had a bullish crossover period. But we had a bullish crossover today with a bullish divergent low here. So if we get follow through tomorrow, this probably follows through. Really, the last time we had that, we had a nice squeeze there. But that is significant to me. You know, I don't really follow Mac too often, but when I see something like that, when you have a crossover for the first time in almost 2 months, definitely pay attention to it, especially when it coincides with this trend line, and it coincides with, you know, all these levels we've been talking about every day, the 50% fib on the IWM, the 50% fib on the Qs, the 382 that we just hit on the spiders. So I see all these things here, and again, like I say, it's really right there on a silver platter for the bulls. They just gotta take it. Basically, what I'm seeing now is algos are just shorting this 20 moving average every single time. It's just a sell program. I've showed you guys this pattern here. That's totally algorithmic. And it looks to me like the bottom 70-75% of hedge funds are just panic shorting to offset their losses. That's really what this looks like to me. This isn't distribution. I mean, nobody's distributing down here. If you wanted to distribute, you'd do it up here. So this is all short selling, and there's fuel for a squeeze. We just need to see it actually happen. The other big bullish indicator that I did kind of touch on in the daily video, but probably not as much as it deserves, this is really significant. HYG up 1.5. That's huge, 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 huge move for this type of a this type of asset here, this ETF. So they defended that 76 level. This was kind of like your support zone on the weekly. Got a little bit through that. And on the monthly, so far they're defending it. So, I mean, if this can close green on the month, it can definitely give the equity markets a lift. And I mean, this is, one of the arguments that I can't, obviously I'm not a perma bull or anything, but I think I'm positioned long for a bounce. But this is one of this is the argument I can't refute. Like the bears have won this argument. The high yield debt selling off is just, there's no way to spin that positive. But if this starts having a relief rally, that is going to help the markets in the near term. So definitely pay attention to that. JNK up the same 1.5, LQD up nicely, up 1% as well. So this could be a good leading indicator here. I've talked about the Russell, higher lows there. It's a good leading indicator. So those are the two really possible bullish kind of catalysts that could be taking place here. But ultimately, the bears had to defend that trend line. But if we continue putting in higher lows here on the NQ and on the ES, I really think it's just a matter of time before this gets broken, and it'll just be a run for the exits. We'll get at least to 4,200, I think, on the E-mini. So if you just take a fib here, I mean, your 50% fib is at 42.20 basically. So I mean, that's a decent area for a bounce. I wouldn't rule out the 618, and I know it seems like that would be a long way away, but that's kind of why I think it could happen, because nobody thinks it can happen. So nobody thought we were going to make a higher high here. I didn't think we were going to make this higher high, but we did, and that's usually what happens in bear market rallies. Sometimes they can go a little bit higher than you think. All right, so that's really all I had. I just wanted to go over those couple of things. Do have a few questions from a couple of you guys that typed them in ahead of time. So we got a DocuSign here for Joseph. So yeah, I mean, this looks like a lot of growth stocks right now. We're in Square right now. We were just in Roku. Like IGV, XBI. So they all have this kind of like sell-off bottom candle and then kind of a semi kind of bull flag. So this has a chance for an ABC up, just like all of those do. And I would give this the upside bias to 85. So that's where I think it's headed. And if you want to trade it, just put a stop below the low. But yeah, I think it's headed to 85. I don't know if we can get much through that. If the market starts to take off, then yeah, it can definitely go higher, but that's where I would kind of give it the upside bias to. Let's look at Shopify. So I had, again, same thing here. This looks like all those same stuff. I wouldn't have a problem with you longing this, put a stop below, 308.06 on a weekly close. And, if this gets a bid, I mean, there's nothing to say it can't get back up to 420. It's somewhere in that area. And then if the market, cooperates, maybe 500. This was your breakdown area. You got a gap just below that, 50 MA just above. So, I mean, that would be your logical targets there. So I don't really have a problem with any of these growths. I mean, take your pick. Like, they all look exactly like ARK right now. So yeah, overall, yeah, I don't have a problem with it. Just don't overload yourself position wise. When we had Roku, I was in 1%. We're in Square for 1.5%. We're not going heavy here because there's a lot of risk in these names. Then I had I had a question on uranium. So URNM, I haven't looked at this in a couple of days. Again, this one probably same kind of thing, really, is CCJ, which outperforms typically. But again, you got to move down. You came down here. I believe I said this area was good for a pivot in one of the weekend videos, if I'm not mistaken. But you got a nice little morning star reversal. So you gapped down, put in a doji, gapped back up, and now you're flagging. Yeah, I would give this the upside bias to about 70. You got the gap fill there, but that red bar is going to be heavy resistance. And then CCJ, which is a little bit stronger, maybe this one can get up to, 2650 if it consolidates a little bit more. But this one definitely outperforms. It did hit a nice trend line here. yeah, a few weeks ago. So that was a nice area. So maybe that can get a 50% retrace of the move there. Let's take a look at that. Yeah, so around 26, 26.50. So that's what I would look for there on CCJ. And then I had some questions on Nvidia. I would look at it. I like it at 150 a lot. I mean, because this is a monster level. Like this is a look at this belly. This is like, I call this like a belly. You know, it's just a big, long consolidation base. That's where the institutional money is sitting. You know, that's where these guys park their money. So they're going to defend that when it comes down here. But here's the only thing. I don't think it gets to 150. I think it's put in a low. Honestly. I mean, maybe it dips down there tomorrow, but I think it honestly, I think it holds this low, to be honest. But, you know, if you wanted to take a shot at it, I wouldn't have a problem with it. Just don't chase it if it gaps up or something. But in this area, yeah, I mean, you could even average in, take a starter position, and then maybe, you know, add in at 150. And if it drops a little bit lower, you can add it again. Yeah, I wouldn't have a problem with it down here. I like it down here. It's really attractive. It's oversold. This company makes money. It's not like these other crappy growth stocks that have no earnings. You know, this is a moneymaker. So I don't have a problem with this one. But personally, I wouldn't, I would like it at 150, but I just don't think it gets there. Oh yeah, so let's look at some pot stocks. I did see some interesting action on CGC. I saw some options flow come through. I think they report Friday morning. It looks like they were selling calls on CGC. Typically, these names squeeze ahead of earnings, so we could see something. But really, again, to reiterate, I'm really just looking for July, maybe late June. I will start nibbling on these. But keep in mind that you know, if we do that, I'll be holding this through the elections likely. When I did this 2 years ago, you know, I was nibbling in like August, I think, and I had to hold through the election because they didn't move. I can actually show you here. Let's go to a daily. Yeah, they didn't move until, well, they kind of, okay, this one did a little bit, but I think Aurora didn't really move. Yeah, that's right. So yeah, it started to bid up a little bit, but take a look here. So it was really kind of in a downtrend though. And then it kind of started to bottom here, and it didn't move up until after the election. This is November 5th, so the election was over. That's when it moved up. CGC. Yeah, it looks like this bid up a little bit in advance. I think Tilray did not, though. Okay, so it bottomed a little bit, but you know, if we do pick these up though, be prepared to hold them, and they're going to be small positions to start. But I'm not really interested in them quite yet. I think we still have a little bit more downside in this market, and it probably should. Yeah, I'm kind of looking towards like late June, early July for a really good bottom in the market, and we'll probably get a summer rally. But that's when I'd be looking at these stocks. Doesn't mean they can't rally a little bit before then, but I think the better time to buy them will be a little bit later this summer. Yeah, crypto's kind of broken right now just because of the, you know, Terra Luna. So it's really just in this kind of this tight range. But if it, you know, if it breaks one way or the other, that's probably going to tell you where the equity markets are going to go. You still have this kind of inside bar on Bitcoin. It's a little weak. You can see it better on Ether. Ether is actually a little bit better looking inside bar. But if it, you know, closes above that, it'll negate it. And I think, and that's kind of what I'm expecting. You'll get a rally to 34, 36,000 on Bitcoin. But I mean, I just think there's too much demand down here. That tail candle is just too powerful. So even if it does dip down a little bit, I think it gets bought. There's also the possibility that because of this sell-off, because of that breakdown with UST, it's possible that this correlation with Bitcoin and the markets could break down or could have broken down. So that's something we'll have to watch for. Eventually, it will break down. All correlations break down eventually, but we'll have to keep an eye on it. But yeah, it's been a pretty boring trade here so far. Yeah, that's exactly. Yeah, exactly. So I just read your question, mechanic. I just read your question. So, um, yeah, basically, that would likely happen. So you're, 0.5 on the Qs, it'd be 325. It's a good move. And for Bitcoin, let's see, let me pop a fib on here. The chart's a little bit different and it sold off a lot more, but you can still get a good idea here. Yeah, so that'd be, like I was just saying, 36,000, and then you got, about 33, 34. There's your 382. Yeah, it can definitely get up there. And then your 618 is right here at this breakdown area. This would be a mega short area if it got up there. Because you got like you got this trend line, you got this red bar breakdown, you got the consolidation level, you got the 618. That would be an area that I would, if it got up there, that's where I would look to short it if it could get up there. Well, it's the thing with that, Henry, is it's when you have targeted attacks on so-called stable coins, it's not, it's not going to stabilize anything. In fact, that's going to cause negative presence, going to make people not want to be in that. Would you want to park your money in something that's going to at any given time can drop 20% in an hour? So we might be, years away from something like that. I think that crypto needs to have kind of a dot-com moment where 90% of these like altcoins and shitcoins get, basically become worthless because there's just too much froth in it. And then once that happens, then it can finally mature. But I think we're a ways away, and Bitcoin's price action has proved that. I mean, it's been positively correlated with the Nasdaq for a while. It topped the same time the Nasdaq did. It's sold off just like the Nasdaq. So at this current time, it's definitely a risk asset. Let's check in on the futures here. Yeah, so again, Nasdaq futures are recovering here. This is a different characteristic from what we saw, a few weeks ago when Apple reported. I think that it might have been this day, I'm not sure. But you guys, I'm sure you remember it. Apple reported and Amazon reported, and all these, we had a decent day into that, and then we sold off after hours and we couldn't recover. We're actually recovering, and we're recovering quicker than even expected here. Like I said, if we get above this red bar, we will go back to double top here. So interesting stuff. Oh, I'm pretty sure we'll get blood in the streets. There will be a lot of things going on sale, not just cryptos. Yeah, yeah. If something is going to add to stability, it won't be something tied to 24/7 on CNBC. Yeah. Yeah, that's a good one. You'd think that, and I still see those. I was watching the NBA playoffs the other night, and it's like they're running that. It's not Coinbase, but it's one of them crypto sites. And it's like, how are these guys, still running? You'd think that they would have stopped by now with how far they've come off the highs, but apparently they're still going. They're still they're still pushing this stuff. I believe there was like somebody, I could look it up somewhere, but there was like a comparison done with what was it, the 2000 Super Bowl, and the amount of like .com ads that were run, and it was like the same thing with all the crypto ads and stuff like that this year. So I think we're in that part of the cycle here, but yeah, I mean, there's just so many other ones that just, and it's, at this point, it's supposed to be like, it's supposed to be stable and like outside of the financial system. But how am I supposed to feel secure about my investment when somebody can just come in and like literally just drop it to zero in one day or less, or in a few hours, pretty much? It was so bad I got to update the Terra Luna thing here. Look, it was so bad they can't show it anymore. They got rid of my they got rid of my Terra Luna symbol. I'll have to update it. Yeah. It looks like a chart of the RSX. Yeah, FTX, that's it, Kevin. Yeah. And I think they changed the name of American Airlines Arena to FTX Arena too. Um, yeah, interesting. I'm glad you brought that up, Joe. So I've been thinking about this, and I haven't really mentioned it, but you notice this week the volume trends are a lot lighter. So today's Wednesday. Wouldn't surprise me if the JV squad was on the trading desk tomorrow and all the big boys were gone. And usually light volume bodes well for bulls, especially if we get, go into the holiday week. So maybe that is the catalyst for a relief rally as we get the big boys leaving and kind of get that light volume float higher. So that is definitely a possibility. We have the holiday weekend. And like I was saying, we kind of have like the big news out of the way, right? The Fed minutes are done. Nvidia's earnings are done. We don't have the FOMC for like 3-4 weeks. So there's not really a whole lot for the market to really, you know, there's nothing being held over its head currently. So yeah, I definitely could see that. And just for the record, when it comes to holiday weeks, I've lost a lot of money throughout my career trying to short markets during holiday weeks. I've learned a long time ago not to do it, but usually that light volume is a big reason why. So maybe we get kind of maybe volatility comes in a little bit here. We get kind of an anemic market. I would certainly welcome that a little bit because this crazy 50, 100 point moves every day is like, it's taxing mentally. It really is. Let's see. It looks like the SPY future. Let's see the E-mini. It looks like they're basically flat. Wow. So yeah. So spiders have recouped all of the losses from Nvidia, or the E-mini has rather, and the NQ is only 20 basis points away. I don't think we see another red week in the Dow, at least not this week. I think we just hit too many. I think we just hit too many levels. Where we are now, here's the spiders. That trend line there, that got defended. That tail got defended. The falling wedge, the MACD crossover, the fib levels. There's just so many factors here. Like, we got to have a green week here. I like volatility too, Kevin, but with this market, there's a little bit, and we all see it, there's a little bit of like something's broken with the VIX right now. Typically, when you get, a sell-off, the VIX spikes, then the market goes into support and it bounces. The VIX comes down, the market goes into resistance and it sells off. What we have here is just a total one-sided. There's no counter trend, rally. It's just oversold to oversold to oversold. And the volatility, I like volatility, but I want there to be a trend, I guess. And there's no like ebb and flow here. It's like every micro rip gets sold. I don't like that. I want volatility, but I want bigger moves to last for, a week or two, rather than just, oh, we had one green day, so let's sell tomorrow. Let's completely sell everything to oblivion the next day. I'd rather have it, volatile like this, but then you get a move up and then a move down and then a move up and then a move down, that type of thing. Let's take a look here at the VIX while we're talking about that. This is something I like to check every now and then. So next VIX contract, June 22, 7 days, 28.85. Then we got a 30 and 14. And then it kind of dips off a little bit here. So a little bit of backwardation going on in volatility, possibly. So that's definitely something to pay attention to. Yeah, I mean, I'm trying to I'm trying to figure that out, Arthur. I mean, like, part of it I think is that we're in kind of a transitional period here. And I think bonds will eventually perform like they normally do. But we're in kind of a state of flux, and the Fed's pulling liquidity out of the system. So it makes it really hard for things to function. Like I've been saying, these guys that the market's trying to bottom. Back here, it was a really good example. The market is trying to bottom here, but there's not enough liquidity. And I was like, we need to get a gap down in order for these market makers to get their liquidity. And that's what we got with heavy volume. We've got good volume, but the liquidity is still bad, if that makes sense. And I think that's contributing to the distortions. I did not BNRG. Oh, did they just IPO? I'm not familiar with this name. $17 to back to 4. Jeez. Yeah, well, QT begins next week, but the market prices it before that. So just be aware. Yeah, I'm still, yeah, nothing's changed, Max. It's just the only reason why I'm positioned long here is because we're we're so oversold and we're into such a good level of support that I gotta think we're gonna have a counter trend. I mean, there's an ebb and flow to the market. Nothing goes down in a straight line forever. They can't keep selling every 1 day rip forever, and eventually, the late shorts are going to get punished. The market makers are going to say enough. So, like down here, we were short, got short right at the top here. But as a swing trader, I might have an overall bearish outlook for the whole year, but I'm playing this swing and then I want to get long here and then I want to, go long here and then I want to get short here. We missed this, but you get the idea. So just because I'm bearish overall doesn't mean I won't play the long side. But as far as gold, it's really hard to say, but everything, I'm assuming you've seen all my work on it, the videos I've done. I'm assuming, I mean, everything's still in play. Everything's still intact, but it needs to break out and make a higher high here. And if it does that, then that would imply that it's going to move a lot higher, and then it's going to eventually crash back down to this level. If it doesn't break out, then it can go a lot lower here if we have mass liquidations. But I say this now, that would provide probably like a lifetime buying opportunity. So, and by the way, to anybody who's like questions gold as like a store of value, it's positive for the year right now. And the S&P can't say that, and neither can Bitcoin. So gold holds up really well, and a lot of people don't understand how gold works. There are a lot of people last year like, oh, we have all this inflation and gold isn't doing anything. Gold is like such a leading indicator, though. People don't understand this. Like, what do you think it was doing all throughout 2019 and 2020? It was pricing in all this inflation. Yeah, that's what it was doing. Um, is there a way to see it? I get asked that question sometimes, and there's really, I mean, there really isn't. Best I can do is kind of give like, I mean, the best you can really do is just look at the low where they defend it. So if that's where it's defended, typically if you break that, that's where people are going to get stopped out, and that's where you're going to get margin called. I know there's some like tools that some people have that like show where they've parked like their money with leap options and stuff. I know they had a lot of money parked at 420 at one point. That's why they defended this level so fiercely. When it got hit the first time, they parked a lot of money at 420 right here. So that was probably a level. With energy, it's the risk with energy is just that it's not like nothing's safe, right? When the margin man calls, nothing's safe. Remember, when we had the pandemic, even Amazon sold off a little, in the beginning. But this company had the perfect fundamental. Like, look at Zoom. This company had the best fundamentals ever for the pandemic, and it even sold off a little bit there. Um, Netflix had perfect fundamentals for that type of situation, and that still sold off. Why did it do that? Because people had to sell it. They don't have a choice. Gold was the same thing. Like, people didn't want to sell gold, but you have to like, unless you want to become insolvent. So Yeah, I mean, like that's really the risk with energy, though, is eventually it won't be safe anymore. And eventually the market will realize that demand destruction is a real thing and it's already happening. So I think we're already in a recession. The data just doesn't show it yet. I go to the pump and I see people, the last person has got like, they filled up $20. I mean, that's demand destruction. Now we're seeing, we're having an issue where these companies that built up all this inventory due to the demand surge from like all the work from home stuff, now they're sitting on all this stuff, and so they're going to have a fire sale on all sorts of discretionary items because people are spending so much money on food and energy that they're not spending it on household items. So I mean, there's already demand destruction going on. So that's definitely a factor there with energy stocks too. But to me, it's really just margin. Eventually that will happen. What's up, Frank? I think we actually hit your expected move on Nvidia, if I'm not mistaken. Oh no, no. It didn't even get close. Never mind. Thanks, Jackie. Appreciate that. Yeah, yeah. Excuse me. The 30-year fixed rate is, yeah, that's, and then you got like the home builders falling off a cliff, and yet these housing prices still won't come down. Um, it's, I don't think it would happen that way, Kevin, because usually the way it works is you're going to get, if it's going to happen, if it's going to go down there, it's going to happen like this, and then you're going to go straight down there at the very end. If it's going to happen, I don't think it's going to be a thousand cuts thing. The, 70% of the way, yes, that's how you do it. The last 30% is in one shot, usually. Speaking of death, somebody today said, was talking about the death cross on Tesla. And if that ain't the best buy indicator there ever was, I don't know what is. This is almost always, especially once it hits the financial media. I actually like Tesla down here. I almost went long on this today, but I already have a Nasdaq long, so there's really no reason. But I don't know. This just looks too attractive down here. It's gone down in a straight line. It's gone down in this massive area here. I don't know. It looks like this is just primed for a huge ripper back to 750, 800 at least. But usually whenever the financial media, when CNBC is talking about a death cross, let me tell you, those guys have no business doing technical analysis. And the death cross it's like such the contrarian indicator. It almost every, now it doesn't mean it won't eventually play out, but usually when it first happens, it's usually good for a ripper. And you got three moving averages crossing there, 150 and 200. I will say this, Kevin, though, if that's going to happen, oh, why am I pulling up Nvidia here? If that's going to happen, we're going to go to 365. The bears have to slam it below this low tomorrow. Like they have to absolutely shut the door on this trend line and like close it below this pivot on Friday. I mean, they have to absolutely brutalize this, because that could cause the cascade. But I don't think, I mean, this correlation's worked out really, really well. And I'm thinking, there's a good chance that this time is the rug pull because it was 1, 2, 3 last time. All right, so we had the one, sell the rip, sell the rip, sell the rip. Tried to sell the rip, couldn't, failed. 1, 2, 3, sell the rip. See if we get there. But bear's got to defend that 20 moving average in that 403.80 area. Yeah, it's a death cross for shorts every single time. Those of you guys have taken the course, I mentioned this quite often. I probably mentioned it on here before, but every pundit, oh, the S&P, the death cross, a 50 MA. Oh, look what happened here. Well, you had one down day, and then that was the low. That was the best buy signal. If you just bought that, as soon as CNBC ran that segment, you just bought everything. I mean, you basically just retired. So, but you got to look at those, Tesla, in fairness, it did cut through that 100 MA, but it also did something very special too. And it hit a 50% fib from the pandemic low. So I'd say that's a pretty good level there. And when you got the pundits on TV, oh, the death cross, yeah, that's usually good for something there on the upside. Right, yeah, tomorrow's the real move for sure. It's interesting lately though, the last couple of months, it's been we've been up on the FOMC and down on the Fed minutes. Today we were up on the Fed minutes, so a little bit of a difference. But yeah, you got to see, we talk about this all the time. You got to see follow through, Just the same story every single day pretty much. Because it's there, it's sitting there on a silver platter. There's tons of shorts in the system. So there's fuel. They just need to actually ignite it. Thanks, Chip. Appreciate that. All right, so NQ, it's trying to push up above this of this red bar here. Yeah, we were up on the last FOMC, but the Fed minutes were down usually. Like the day of, anyway, not the next day. In hindsight, and I saw this too. That was actually a pretty good inside bar there on the NQ. But we talked about it. This here's the level, right? They've been really defending that, but we do have the higher lows coming in, and on the hourly, you do have a nice inside bar here. So maybe they can push it up overnight. And again, we're going into a holiday weekend, so we got the big news out of the way, so the big boys might not have any excuse not to just leave for the Hamptons for the weekend early. They do that very often, so we'll see what we get. See SMH after hours. 225, 226. So semi is really, so semis after hours, even with the drop in Nvidia, they're really basically right in this range here. 225, 226, right around here. So, I mean, that's not a terrible drop there. Yeah, I'm with you, Chip. It's just they got to prove it. Like there's so many. I feel like every day I see some new type of like buy signal or some type of bullish divergence, but it's like they gotta just have follow through. We had a good update today. If we can have a green day tomorrow and close above this high, I think that'll be enough to cause a squeeze. But then there's always this this 403.80 area here, this red bar. Then you got this gap. You got the 20 MA, which has been sold every time. So, it's up to them to prove it, but it's all there. It's all sitting right there. They did, Kev, they did do that. What day was it? Well, they did it here. I think it was one of these Fridays they did it. And I was like, yeah, they just turned the sell programs on and left the office at 10 a.m. It was that one day where it just went, it would probably pull up on the hourly here. You probably see it. I remember specifically, there was this one right here. Let me look at the 10-minute. It was like there's no way that a human was doing this. Yeah, right here. There's no way a human did that. Like that is a computer. That is not. I mean, like, the market opened. Okay, short. Okay, leave the office. This is a Friday right here. Oh, all right, we're gone. There's no way a human did that. Yeah, yeah, exactly. Yeah, death cross. I mean, what I look for and what is determining trend here. So everybody thinks like a trend change is like the crossing, but really what determines a trend change is the spacing between the moving averages. And now we're starting to increase the spacing here. It takes a while for it to happen on the weekly, but the daily, the trend is starting to strengthen here to the downside. It doesn't mean you can't have counter trend rallies, but yeah, those death crosses, I pay attention to them. But look right here. Here's a perfect example. The second we had a death cross here, what was that? Oh, FOMC face ripper. There's another perfect example. Oh, there's only like a 400 point rally on the spot on the SPX. Right, exactly. Yeah. Yeah, you got to wait for a trend to actually change. The crossing, it's important obviously, but it doesn't always mean anything. Because I've seen it happen where, it'll cross over and then it'll go right here. It crossed over and then it went right back. So the CME, I mean this one. So the only reason I don't like this is just because it's not, I'll use this, but it doesn't show what happened on the weekend. And a lot of the time, a lot of things happen on the weekend with Bitcoin. Like right here, there's a massive gap because we sold off hard on Saturday or a Friday night or something like that. So I don't really put too much behind the gaps here because there's a lot of trading that goes on over the weekend. But yeah, I mean, it's there. And in that area, like I said, 36,000, that's going to be a good area for upside if it does manage to get up there, or if it can manage to break this range, rather. It's such a tight range, though. And you're seeing a little bit like Mara trying to put in that ABC up pattern we talked about. Riot, MSTR. MSTR looks the best out of all of them. This is, I wish I had shorted this. This is such a clean bear flag, by the way. Look at that weekly. That's a perfect bear flag. Right into that 20 MA and then sell off. But it's got a chance to get up to maybe 300 or so. All right, cool. So we've been going about an hour here. I'll answer any other questions anybody has outside of that. Gonna wrap it up soon. Yeah, Arthur, yeah, that was one of the things I pointed out in the beginning. So you got it right there. It's the first time since April. You know, I don't put a whole lot of stock in the MACD usually, but when I see it, like I said, when I see it coinciding with this trend line and all these other factors, you know, probably has a little bit, you know, a little something to it. Hey, what's up, Jay? All right, guys. So yeah, I'm gonna wrap it up here. Let's take one last look at the NQ. All right, so we'll see if we can break this little green bar. It looks it's trying, or red bar, it's trying to. So again, it's all about proving it. Prove it, prove it, prove it, bulls. Make those late shorts pay. And then I think we can get a squeeze, but we got to see it to believe it, right? So that's kind of what we're looking at tomorrow. The one, you know, a couple things I'll say though, the HYG looked really, really good today. It's not often you see 1.5% move in that. I like the higher lows on the Nasdaq, and I like the fact that we're recovering after that bad earnings reaction. A week ago, you know, really all last month and a half, I feel like we would have been down here by now, right? But we're actually recovering, so that is a good sign. Who knows what happens in the overnight? You know, maybe it sells off. We'll see. But anyways, yes, I know. Well, we know the level, Kevin. We're watching it right there. So basically just above 12K. But yeah, anyways. Yeah, everything looks all right. So anyways, yeah, I'm going to wrap it up here. You guys take care. Thanks for coming out. It was a good time. Appreciate all of you. I will talk to you all tomorrow.